Hello, in this video I'm going to perform a vertical income statement analysis of two of my favorite childhood product companies, Coca Cola and Pepsi. We'll learn how to perform a vertical analysis or common size analysis, compare the actual income statements for the year ended 2020 for Coca Cola and Pepsi. My source is Yahoo Finance. So if you type Yahoo Finance on Google and then click on Yahoo Finance website, you can actually search for the company. If it's a publicly listed company, you can search for the ticker symbol or the name. So if I just type Coca-Cola, the ticker symbol is KO. I click on the Coca-Cola company, provides a very nice summary of the stock price and some key market information. What I am interested in is the financials. So I click on financials and then income statement. So the year I've chosen is the recent year, which is the year 2020. So the financials or income statement represent the 12 months period ended 31st of December 2020. So I've taken these numbers and I will do the same for Pepsi as well. So what is a vertical income statement analysis? Well, in a vertical income statement analysis, you divide each line item, each number in the income statement with a common number, with a base number. And most of the times it is your total revenue or your net sales. That is your base number. So we start by the total revenue itself. So it will be equal to your total revenue divided by your total revenue, because your denominator would be the base amount. That's total revenue in this case. However, just to make sure that as you drag the formulas down, your denominator stays the same, you will lock or freeze the cell reference C4. And as soon as I enter, you see that our total revenue is 100%. But now if I copy the formula all the way down, you can see that the percentage has been calculated. And each percentage here represents the size of that line. So for example, in the case of cost of revenue, the 41% represents that the cost of revenue is 41% of your total revenue. This is vertical analysis. This is also referred to as common size financial statements or common size analysis, because you're looking at each line item as a percentage of a common number, a common size, which is the total revenue in this case. Anyway, we have the percentages, and as I look at it, usually when I look at income statements, I also look at them vertically from top to bottom, and usually the first thing I look at is the total revenue, and the second thing I look at is usually the EBITDA, the earnings before interest, tax, depreciation, and amortization. Now, if we look at these percentages, what we can see is for Coca-Cola, their EBITDA is 39%, which is pretty healthy, which is a very healthy number. What it means is that currently, based on the financial results of 2020, for every $100 of sales that Coca-Cola makes, it makes an EBITDA or profit excluding tax, depreciation, interest, and amortization of $39. So $39 on $100, right? Let's add Pepsi in the mix now. There you go. So now we have the income statement of Pepsi for the same year. And again, my source was Yahoo Finance, but you can actually look up all of this information on most of the public companies' websites. They have their financials usually posted on their websites as well. Now, the first thing I noticed, and it came as a surprise to me, that Pepsi's revenue is actually almost more than double Coca-Cola. For some reason, I always thought that Coca-Cola was a larger company as far as revenues and profits are concerned. But I was actually surprised to see that Pepsi's revenues are $70 billion compared to Coca-Cola's $33 billion. So that's actually, if you calculate, 2.13 times higher. So Pepsi is more than double the size in revenue compared to Coca-Cola. One thing I want to highlight is this is actually the first time I'm looking at the income statement of these two companies. I used to be interested in their soft drinks or cold drinks as a kid. Not anymore, as I think it's not very good for health, but I've never seen their financials. This is the first time I'm seeing their financials with you. So I don't have any background information on the business. The second thing, as I mentioned, is like usually when I look at income statements, I look at the top line and the bottom line, which is EBITDA in this case. You see that their EBITDA are pretty much the same. Despite having 2.13 times higher revenue, Pepsi's EBITDA is the same as Coca-Cola for the year 2020. So it means their profitability is much less than Coca-Cola. And we can see that by doing the same calculation as we did for Coca-Cola. So you can clearly see here that Pepsi's EBITDA is only 18%, which I still think is very healthy, but compared to Coca-Cola of 39%. Again, there's a lot of information that usually is behind these numbers, so I don't know what's driving this. We are only looking at 1 year. A better view would be looking at previous year's information as well, and also looking at the details behind the numbers to really understand what is driving the difference between the two companies. If you are comparing these two income statements, and let's say you are analyzing Pepsi or you are representing Pepsi, the question you would ask is, why is Coca-Cola more profitable than Pepsi? And this is where you can do a very quick comparison. So let's call it difference. And this would be your percentage for Pepsi minus percentage for Coca-Cola. So we know as at a total revenue level, there's no difference. If I copy the variances down, you can see that there are a few items which are the key differences. So for example, the cost of revenue for Pepsi is 45% of total revenue compared to the cost of revenue for Coca-Cola, which is 41%. You have a difference here of 4%. Similarly, the operating expenses, and I think these are the largest contributor to this difference, there is a difference of 11%. So while Coca-Cola's operating expenses are 30% of their total revenue, Pepsi's operating expenses are 40% of their total revenue. Now, if you want to do a quick calculation to see what should Pepsi's operating expenses have been if they were operating at the same level as Coca-Cola, you can do that quick calculation right here. So you will take your total revenue for Pepsi because that's our base, but you will multiply it with the percentage for Coca-Cola, which is 30%, not the 40%, but 30%. And if you do that, you get to a number. This is the dollar amount that Pepsi, with its larger revenue base, should have based on if we think they should have the same operating expenses as Coca-Cola. Again, there's a lot of detail that goes behind it, so we cannot say that. But just to give you an example, if you don't have any background information, these are some of the questions you may ask, right? So if the operating expenses of Pepsi should have been 21 million, then it means their operating expenses are higher by 21 million minus 28 million. That's around 7.7 million. So now what could be driving the higher cost of revenue in the case of Pepsi? Well, there are a lot of possibilities. There could be simply the cost of the products that Pepsi produces is higher than Coca-Cola. There could also be the difference in product mix. The products that Pepsi produces and sells, they may be at a lower profit margin compared to what Coca-Cola is selling. So what sort of product mix is included in that number? The prices of Pepsi's products could be lower than the similar prices that Coca-Cola sells. And what about the costs of freight and transportation? Could they be higher than what Coca-Cola has? This analysis of gross profit takes a lot of work. It could be very detailed if you like. But at a high level, by doing this vertical analysis and common size analysis, we know what areas to explore. Similarly, what's driving the higher operating expenses? Is it the location or geography where both of these companies operate? Is it the selling expenses, marketing expenses, general and admin expenses? That's where you really look at the financials in detail and start analyzing if you really want to analyze. Now, this has made me curious. I want to take a look at the balance sheet and cash flow for these two companies as well, because this came as a little bit of a surprise that Pepsi is much larger than Coca-Cola. And I'm also interested to see how different their balance sheet and cash flows look. Are you interested as well? Let me know by leaving a comment in the comment section. And if you found this information useful, helpful in any way, I would really appreciate if you click like. The download file is available in the description if you want to do the calculation just like I did. So make sure you look at the description and download the Excel file as well. If you are interested in learning more about gross profit or how to read an income statement, I have videos related to that. If you want to analyze income statement versus budget and prior year in a little more detail, I have a video related to that as well. Make sure you check out those videos, and if you haven't subscribed to my channel yet, make sure you subscribe as well.